Hello, everybody. I hope you had a nice Monday. The stock market overall had an okay Monday. This pattern of gapping higher, not being able to build on the gains, is continuing, and it's just making for some very, very confusing trading. And there's so many levels to go through that we want to. I'm going to definitely focus on this, and at the very end, I'm just going to throw out the sells and then the add. We're adding to a position that we just bought. It worked out, so we're going to add to it. But I want to focus on the market right now, and it's a mess, a big mess. Overall, the Nasdaq, Riley, like I said today, it's back above the 50-day moving average. That move back above the 50-day moving average with the Russell 2000 already above the 50-day moving average, and that's the index that you always want to see lead. Nasdaq also, and now that we have both of those indexes above the 50-day moving average, our model is now in bifurcated signal mode. We are back to a neutral condition on the Nasdaq and Russell 2000. However, when you look at the S&P 500, you can see that we're clearly below the 50-day moving average, and on the Dow Jones Industrial Average, once again, clearly below the 50-day moving average. New York Stock Exchange also. During this time, the good thing to see from this latest little rally off the June lows, look at the relative strength line of the Russell 2000. Despite price not being at a new high, the Russell 2000 is hitting a new high on relative strength basis. And look at the relative strength basis over the past 3 sessions. Very, very powerful move. Boom, boom, boom by the relative strength line of the Russell 2000, showing some short-term relative strength. Nasdaq the same way. Short-term, the Nasdaq relative strength line is hitting a new high, and it's been powerful the past 2 days. The problem with this, though, the Russell 2000 doesn't have any volume behind its move, and you can look at the ETF to confirm that. The Nasdaq has no volume behind this move. You can look at the ETF to confirm that. Friday's volume was an end of the month, end of the quarter surge, so you really have to take that with a grain of salt. And then if you look at the S&P 500 volume, you can see also outside of Friday, it's below average. And then once again, my biggest issue is the gap ups and then go nowhere. The Nasdaq during this rally attempt gapped up on the 25th, closed lower than where it opened. On the 26th, it gapped up and closed just slightly higher from where it opened. On the 27th, it gapped up and closed just slightly higher than where it opened. On the 28th, we barely had any gain whatsoever. And today, we gapped up and only closed 4 points higher than where we opened, considering that we were up 31 points on the day. That's not good overall if you're looking for an extremely strong market, because an extremely strong market, historically speaking and back testing, it's without a shadow of a doubt, this is what a good market looks like. You gap lower to start off the session. You rally throughout the day to close the high day and close up for the session. In good, strong bull markets, you actually gap down. You don't gap higher, as a lot of people don't believe in the overnight gains. Here, we're gapping up every day in a V-shaped fashion, which means that we could easily fail. On that note, though, we keep having longs do great. You got TYL putting in a buyable move today. However, whenever I looked at its weekly chart, I noticed, this thing has been in an uptrend for a very long time. It's not like that this is a new move. A monthly chart shows it going straight to the moon. So I didn't want to take that one long, but the point is that we still have nice moves out there. Look at INVN move over the last 3 days. Very, very bullish looking chart overall. This has got to be clear accumulation. Tango is still working on its base that it was forming, and at the same time, you have IPOs like Data that broke out. I did not take the new long the signal that it basically generated here. I did not take this as a new long signal, did show it. If you did, congratulations, because it's now working out. But Data's even working. You got Best Buy breaking out to new highs and Netflix producing a pocket pivot point. You have Tesla wedging higher. And look at how fucked up this market is. You got Tesla wedging on a breakout. And whenever it started to break out, I was on this. I wanted to buy this stock as soon as it started to move higher again. I was almost for certain we were going to get a volume surge. We did not, and this low volume breakout is now culminating in even a lower or a little bit have a higher volume, follow through to the breakout on a wedging pattern, and the volume still today is just average. But here's an arithmetic chart of Tesla, and it's just silly looking to see a stock break out like this. And then at the same time, I'm watching SCTY base out, and while its move is nicer off the lows, it's not like there's any huge volume off the support there. And look at First Solar's right side of its base. There's not like that. It's really smooth yet, so it still has time to even work out before it becomes a logical right side of a base and then break out. And then the Tesla syndrome is symptomatic also in Sun Power, as Sun Power is breaking out on no volume. It's the weirdest market. And it's been this way for 3 years, and there's no wondering trend following CTA and hedge fund firms are getting their ass handed to them in the month of May and June. Luckily, we are not. But hell, if we start to hit our ass handed to us, I tell you what, I won't be surprised. These V-shaped breakouts followed by more, calmer base patterns of breakouts that fail is just a very, very strange situation to see. But despite all that, once again, like I said, the NASDAQ is above the 50 and the Russell 2000's almost at new highs. So it's like, what do you do with this? And on top of that, Faro's giving us a 25% cover signal, closing above the 20-day moving average for the first time since we went short. And NAVB, even though it's not closing above the 200-day moving average, it's now making a series of higher lows and now higher highs. The 274 closes above the 269 close back on 617. So that, along with a close at the 200-day moving average, that's a full cover, with the green bob showing up, especially in the 3 pocket pivot points off the lows, all so far producing gains. NAVB is a full cover. You would think if the market was weak and ready to eat shit, NAVB would not be a full cover, and we wouldn't have a partial sell in Faro, and we wouldn't be selling 50% of our hedge in UVXY and SQQQ due to the neutral signal. Why isn't SQQQ a full sell? Because from our original position that we took hedging ourselves, we still have gains, and we're still not at new highs. Until the Nasdaq hits new highs, that hedge is not coming off. And with the way the S&P 500 looks, it might not be coming off anytime soon, and we may continue to chop around. Still, with that being said, when you got longs out there looking like they do, and our holdings holding up well. I mean, even INSM, which was our only stock that we had to sell on the long side, isn't a full sell because it's closing higher than where it opened. What if it closes below $9 tomorrow? Let's say even $8.99. It's a full sell, but until then, INSM is still good. And then one of our new longs, VVT, gave an add signal today and gave so with a pocket pivot point buy signal while holding the max green bop. It's kind of hard to argue against a market when 2 of your 3 new longs did well, and while CCF had a rough time, it's a thin stock, it's expected, overall held in well. So CCF didn't hold in that well, but still held the lows of the breakout day. Right here, remember the final cut loss on my end's 21.73, 21.99's above, so everything's good. And as a matter of fact, it's still above the 20-day moving average, so there's no partial sell, obviously, and it still has very strong bop. TRLA works, VVTV is giving you an add signal, and then you get, the NASDAQ and Russell 2000 doing what it's doing, and you just have a market that's really, really odd right now because we shouldn't be gapping higher and then not able to build on these intraday gains. We should not be selling off the way we do in the final hour or near the end of the day that we do on every day since these lows in June. So a reversal to the downside would not shock me. A breakout to the upside also wouldn't be surprising with the new round of POMO, I think, schedule coming out and it being clear that they're not slowing it down anytime soon. But, at the same time, we have to take all signals with a grain of salt. So the sell to neutral, if it goes to a buy or if it goes to a sell, unless volume's confirming in all of the indexes, all of the ETF and inverse ETFs, and in the leading stocks like Google, Amazon, and Apple. You see Apple's rally today. Unless everything is in confirmation across the board, it makes it very hard to believe any signal you get. This is why I'm all about being neutral here, and you should be too, no matter what kind of signal we're in right now. It's summertime, and all I got to keep saying is neutral, 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 neutral. Do not take sides.